Welcome back. The company on our radar right now is Zensar Tech. At the start of the month, the company also held an investor conference for many analysts where they did reiterate their ambition of getting to the top of the industry growth rates in 2 to 3 years, the top quartile of industry growth rates and margins. So Vijayasimha, who is the Chief Operating Officer at Zensar Tech, is now joining in. Thank you very much for joining in. Just to dwell on the point that we were talking about, you reiterated your ambition to be in the top quartile of the industry when it comes to revenue growth and margins in the next 2 to 3 years. So what kind of growth and margins are you targeting, say by FY28, FY29, which can get you to the top quartile growth?
Yeah, so look, I think, first of all, thank you for having me on the show. Very clearly, I think what we are currently seeing in the immediate future is a certain level of uncertainty associated with the macroeconomic conditions. But this provides us with an opportunity to be part of certain large cost optimization kind of deals, help some of our clients establish GCCs in India, and more importantly, move the needle in terms of experience-led everything, which is what most of our clients are looking for, right? So that will help us basically accelerate growth. In terms of margins, we are clear that we will be in the mid-teens and we will invest that in sharpening our capabilities and selling more to our clients. So we are not necessarily talking about, from a margin perspective, uplifting what we currently are. We want to be here, but we definitely are looking at accelerating growth over the next 2 to 3 years.
Do you think by, say, 3 years down, we could be at a sustainable double-digit kind of a growth rate?
That's the aspiration, but of course, a lot depends currently on the macroeconomic situations. When you look at it, Jan and February started off on a very positive note. We were seeing a lot of green shoots. But then subsequently, with the tariffs and all of the other geopolitical considerations, there definitely is a certain amount of uncertainty. I think we have significant headroom for growth as a company, right? And we are sharpening our capabilities in multiple areas, primarily the experience-led services and also AI-related services. And we have some very unique stuff around these two propositions. And we have coined it as lead with experience and lead with intelligence, right? And that we believe will help us differentiate the value proposition to our clients, thereby delivering them superior value. And we are glad that we are already in the top quartile of the customer satisfaction index. So that, I think, is very, very key for us to be able to accelerate growth.
Mr. Alilughatta, good morning. Thank you for joining in. You mentioned, sir, in your investor day that uncertainty over the last few days has increased. In what sense, if you could elaborate on that, and how has that impacted on a more company level, whether it has resulted in any form of cutback in client spending, or has it resulted in delays in deal signings? If you could elaborate more on that.
Yeah, so I think if you look at the US economy, right, I think it kind of contracted by 0.2% in Q1. As a consequence, different clients are basically reacting differently. The consumer services segment is one place where we are seeing a significant amount of caution when it comes to discretionary spend. Similarly, the tech sector, clients in the tech sector are also reducing their discretionary spend, especially given the large kind of outlays that they had for digital transformation projects in the previous years. So there is a certain amount of, I would say, caution when it comes to spend. Having said that, we are seeing quite a bit of cost optimization, cost consolidation deals on the table, and we are going after those things. The BFSI sector has been largely stable in the last few weeks. So overall, what we are seeing is that there are certain places where it is taking longer time for the decisions to be made. But at the same time, I think there are quite a number of good deals in the pipeline. So we are cautiously optimistic despite the immediate level of uncertainty that is there.
Cautiously optimistic based on the deals in the pipeline. We'll come to is there going to be a delay in converting these deals into a pipeline? If you want to just throw in a quick word on that, because of the uncertainty that you alluded to. And secondly, I wanted to get your thoughts in on agentic AI, because you did say that generative AI will have a limited impact on enterprises as compared to agentic AI. I think that was one of the discussion points in the investor call as well. So tell us, elaborate a little bit more on that.
Yeah, so look, I think it's a mixed bag currently in terms of deal closures. In certain geographies like Africa and Europe, we are seeing quicker deal closures. In specific places in the US, we are seeing slight amount of delay. So I think it's a mixed bag at this point of time. It's not like a one size fits all kind of a situation that we are currently in. With regards to agentic AI, I think what we are seeing is that it's not just about Gen AI, but a combination of technologies, right? Be it AI, traditional AI, Gen AI, data, all of those things, right? Coming together to deliver business value to clients. That is what the focus is on. We are seeing a fair bit of what you call openness among our clients to look at agentic AI, be it in the area of legacy modernization, be it in the area of reducing significant amount of cost in maintenance of applications and things like that. What we are, of course, still in some of the POC phases is about micro vertical specific use cases, right? How does agentic AI play there? We have had some very cool stuff in a couple of places. We are actually looking at fine tuning some of the SLMs for industry specific use cases, and that is finding resonance with our clients. So definitely, I think agentic AI will help deliver value to businesses. Are of course cautious given the larger scheme of things around whatever spend and stuff like that.
Mr. Alilughatta, quick couple of questions. Every time a company tells us that they are cautiously optimistic, they are more cautious than they are optimistic. So are you cautious more or are you more optimistic? And the second part of my question is, with BFSI being your largest segment, it's still not the most profitable one. But in the US, the BFSI is one segment that has still done well despite all of these uncertainties. Do you see that improving?
Yeah. So look, I think I'll not give you the answer that you're looking for. We are both cautious and optimistic. And as our results have demonstrated, I think we have been growing over the last few quarters. And we are hopeful that we will continue to basically deliver growth that both the industry as well as the shareholders are going to be happy with, right? So that is what we are. And sorry, what was the second question? I forgot.
The BFSI bits, it's still your largest business, but still not the most profitable. Does that improve in FY26?
So look, I think for us, BFSI has been fairly profitable, right? I don't think it is drastically different from the rest of the segment. And BFSI has been one of the key growth engines for Zensar over the last 2 years. And we, at this point of time, believe that it will continue to be the same for the coming future as well. We have some deep industry expertise in the BFSI space coupled with the technology capabilities. And as a consequence, we are able to basically make this the growth engine.
Thank you very much for joining in. That's the word coming in on Zensar Tech. Get into a break. On the other side, Somil Mehta of Mirae Asset Sharekhan will join in for a technical check.